Hello and welcome to Yadnya Investment Academy. Today we are going to discuss about advance tax. What is it? Who should file it? Due dates? How to calculate it? Late payment interest and exemptions. As the name suggests, advance tax refers to paying a part of your taxes before the end of a financial year. Also called pay as you earn scheme, advance tax is the income tax payable if your tax liability is more than 10,000 rupees in a financial year. It should be paid in the year in which the income is received. This is very important. Advance tax receipts help the government to get a constant flow of income for themselves throughout the year rather than receiving all tax payments at the end of the year. For instance, if your tax liability for financial year 2017-18 has exceeded rupees 10,000, you are expected to pay the advance tax in financial year 2017-18 itself. Now we will discuss who should file it. So if you are a salaried employee and only have a salary income, you need not pay advance tax as your employer must be deducting TDS, that is tax at source. However, advance tax is applicable when an individual has source of income other than his salary. For instance, if an individual earns income via capital gains on shares or mutual funds, or interest on fixed deposits, or winning from lotteries, capital gains on house property besides his salary income, then after adjusting for expenses and losses, he needs to pay advance tax if the tax liability, this extra tax liability, is more than rupees 10,000 for the year. So basically, while employers deduct TDS on salaries, advance tax is paid on income that is not subject to TDS. So mostly professionals, that is self-employed people, businessmen and corporates have to pay taxes in advance as no TDS is deducted from their income. These are the current due dates of advance tax payment for both individuals and corporate taxpayers. So before 15th June of the financial year, you should pay 15% of total tax liability of the year which you have calculated. You should pay that. And similarly, before 15th September, 45% of total advance tax liability, and before 15th March of the financial year, the 100% of advance tax liability you should pay. Now let's understand these advance tax calculations. An individual can calculate advance tax on their own mostly and determine if they have to pay advance tax or not. Listed below are steps. First is determine the income you receive other than your salary where TDS is deducted. So example, Raju is self-employed and is expected to have a business income of rupees 10 lakhs in the current financial year. Second step is minus the expenses. So deduct your expenses from the income. You can deduct expenses related to your work such as rent of the workplace, travel expenses, internet and phone costs, etc. So for example, Raju has expenses of rent and other official expenses as rupees 4 lakhs for this year, which he is expecting. So total taxable business income now becomes rupees 10 lakhs minus 4 lakh, which is rupees 6 lakhs. Third step is add up other income that you might receive in the form of rent, interest income, etc. So for example, Raju also expects rupees 1 lakh income from his fixed deposit interest rates and rupees 1 lakh from rent after the deductions. So total income now becomes rupees 6 lakhs plus this 2 lakh, which is rupees 8 lakhs taxable income. Now calculate the tax liability. So based on the type of company, which is a proprietorship, partnership or corporate, person has to calculate the tax liability. In case of proprietorship or as an individual, tax will be calculated as per the existing income tax slab of individuals. So for this you can see our video on how to calculate income tax. So in our example, so suppose Raju has a proprietorship firm and his tax liability is rupees 1.5 lakhs as per the existing tax slab. Next step is deduction of TDS which has already been paid. Many firms pay your money after deducting TDS. Also, banks deduct TDS on the deposit interest. In our example, suppose Raju has already paid some TDS on deposits and some clients have deducted TDS on business income as well. So total TDS already paid by Raju, suppose, is rupees 20,000. So this will be deducted from his total tax liability. Next step is to calculate total advance tax, which will be the calculated advance tax liability in step 4 minus the deduction of TDS which has already been paid. So if the tax due exceeds rupees 10,000, then you will have to pay advance tax for the year. So in our example, Raju has the total tax liability of rupees 1.3 lakhs. Now he has to pay advance tax by this schedule in order to avoid interest penalty. Now Raju can pay advance tax using multiple ways by using tax payment challan number 280. He can do that at various bank branches or through the online banking of SBI, ICICI Bank, HDFC Bank and etc. He could also pay it online through Income Tax Department's website or NSDL website. For details, you can check our video on how to pay income tax. Next, we will discuss about if we miss the deadline and what is the penalty for late payment of advance tax. So if an individual forgets to pay the advance tax by the first deadline, then he has to pay the interest. Interest is computed as 1% on the defaulted amount for every month until the tax is paid off completely. So same interest penalty will be applicable if you don't pay for the second or third deadline as well. Now what if the advance tax is paid more than required, which may be the case for some of the individuals who may have overestimated their income for the year. So if the amount paid as advance tax is higher than the total tax liability, assessee will receive the excess amount as refund, and interest of rupees 6% per annum will be paid by the Income Tax Department to the assessee on the excess amount if the amount is more than 10% of tax liability. Last, we will discuss about who are exempted from advance tax. First are, of course, as discussed, salaried employees who already pay their TDS every month aren't required to pay advance tax separately. Senior citizens who do not own any business are exempted from paying advance tax. Taxpayers who opt for presumptive schemes are exempted from paying advance tax every quarter and can pay in one go at the end of the financial year. So these presumptive schemes are applied for the people whose business turnover is less than rupees 2 crores in a financial year, and these schemes have already been extended to doctors, lawyers, engineers and architects as well, provided their annual total income is less than rupees 50 lakhs. If you want more details on this presumptive scheme, put it on the comment section, we will help you. So for taxpayers who have opted for presumptive taxation scheme in India, this is the deadline for advance tax. So that is all we have on this topic. If you have any question on advance tax, please do write in the comment section below and do not forget to subscribe to our channel for more such videos. Have a great time ahead. Jai Hind.